Good afternoon and welcome to ES Capital's webinar on the first face-to-face meeting between US President Joe Biden and Russian President Vladimir Putin, which took place in Vienna yesterday. My name is Anja Walscheid. I'm part of the Investor Relations team at ES Capital. It's my pleasure to welcome Anders Borg, Sweden's former Minister of Finance and our expert and advisor on macroeconomic and political events, and Jakob Grappengießer, partner and head of Eastern Europe at ES Capital based in Moscow. Anders, what were your expectations for this meeting, and were your expectations met?
Well, I do think the meeting actually went fairly well. We didn't have expectations for a real summit with a lot of declarations or agreements, but a couple of work streams started on cybersecurity, also on arms control, and it seemed to have been a fairly civilized discussion. It wasn't a kumbaya moment, Mr. President Biden said, but on the other hand, I think Putin summed it up that there is also, quoting Tolstoy, a glimmer of hope for a more stable and predictable relation. So if you take a step back, I think this is a further step to kind of at least start to stabilize and decrease the political risk regarding Russia.
Yeah, I think if I may add something, I think it's very important to note where we were 3 months ago. At that point in time, we were speaking about Russian tanks at the Ukrainian border, possibly more sanctions for the Navalny issue. And I think it was in general a very, very negative sentiments against Russia. Now we are speaking about Biden and Putin having a positive dialogue. We had actually a reversal of sanctions, or a small one, but still, I mean, the US put a waiver of sanctions on the Nord Stream 2 pipeline, or the construction of that. So I still think it's a very large difference compared to where we were 3 months ago, even though the kind of tangible achievements from this particular summit perhaps weren't that great. Another issue is, I think, on the diplomatic front. I mean, I live in Moscow since 14 years, and you can't get a US visa at the embassy in Moscow. That is just closed. They just don't issue visas. I mean, you need to fly to Warsaw or to Georgia, or to similar to, if you're a Russian citizen, to get a visa. So the fact that they're reinstating their ambassadors as a first step, and then they will work on further kind of beefing up embassy staff both in Warsaw, in Washington and in Moscow. I think that's also quite an important step used for the kind of handling the day-to-day matters and communications between the two countries. So I still think it was hopefully an event that marked, when the tide kind of turned to more positive relationship, and at least stop the fear of further sanctions. Because we who invest in Russia, the problem for us had been not that we have sanctions, but the threat of further sanctions. And I think that the threat of further sanction has been significantly reduced.
I think it was also wise of them not to oversell this as a major summit, because they managed expectations well. And there are some really difficult issues like Navalny, human rights, Ukraine, Belarus, and so forth. So I think it would be naive to hope for a broad reset. This has to be a process of stabilization, increased predictability, and then we can work our way forward from that. And I've never been a great fan of sanctions, and one of the reasons for this is that it's always difficult to know when you can and will start to take them back. I mean, once the economy has adjusted to a sanction mode, the sanctions also become fairly inefficient. And I mean, Russia is extremely macroeconomically robust. It's a current account surplus. It is a quite hawkish central bank. It's a low debt level of the public sector. a very strong framework for fiscal and monetary policy. So the fact that sanctions have harmed Russia in the beginning, I think they have countered with fundamental macro stability measures. And now the discussion on where the Russian stock market is going is more about the recovery in the world economy, more about high commodity prices, and the fact that we have some very strong tech companies in Russia with a much less inflated valuation. So I think with the right management of the expectation, this was a good outcome, and to some extent I think that's been in the market over the last week or so. People didn't have more expectations than to see a start of a process of stabilization.
Jacob, how did you perceive this meeting, and how was it generally perceived in Russia? How did the stock market react? Was there anything noticeable?
Yeah, I think for Putin, it is really all about respect. He wants to be respected by the American president. I think with Obama, they never really got along that well. I think Trump tried to embrace him, but he couldn't simply do so for domestic or political issues in the US. But Biden is a tough guy, Putin is a tough guy, and the fact that he gets some respect, appreciation, and time dedicated from Biden's side, I think that's very important to Putin. So in a way, I think Putin also will be more constructive, and maybe try to help out a little bit more due to this meeting. So this is why for me this meeting was really quite important, despite the lack of perhaps very tangible achievements. Domestically here, it is seen as a victory. It is seen as Russia is this kind of great nation, whose leader is meeting with the American president. So clearly, it is also positively perceived in Moscow. The stock market, well, the ruble actually strengthened slightly after the meeting. The market and the ruble slightly declined this morning. I think that's more on the back of relatively weak global markets this morning. So I would say that the market reaction yesterday and today has been quite muted, but the Russian market has moved up significantly in anticipation of this meeting. And I think effectively the result of that was that, well, it was according to market expectations. But the Russian market moved up 10 percentage points or so in the past 1 month, and it's up 22% year to date. And that should be compared to emerging markets that are up 9% year to date and developed markets that are up 13%. So Russia significantly outperformed most global markets, and partially because it was cheap, but partially also because of the perception of geopolitical risk slightly decreasing.
Yeah, and all that despite of sanctions.
Sorry.
I was just going to the next questions. What are the areas where you could see potential cooperation between Russia and the US? And what role could Russia actually play in the alliance that Biden is trying to build against China?
Well, it's clear that Russia has no intention in the present situation to become a part of a US-led alliance in this struggle between US and China. Then you will have to have an enormous amount of progress. I think we have to settle with more tangible achievements such as cybersecurity, arms control. Maybe also we could see a slightly better dialogue on Ukraine in the Minsk process. I'm not sure that we should be too hopeful on that. So to my mind, it will not be the geopolitics that is really supportive for Russia. It's not as strong restriction as it has been, and due to the fact that, as Jacob pointed out, that we have much lower valuation, a strong recovery, high commodity prices, and stellar macroeconomic stability. I do think that that's the factor that will be driving the stock market going forward.
So do you see it's likely that US-Russian relations would stabilize now and maybe gradually improve from here?
Yeah, I think that the relationships had hit the rock bottom, right? I think we were at the record low from the end of the Cold War. So I don't think it's difficult to say that they are improving. I think the big question is really how much further will they improve? But if you look at the stock market, what is important is the direction. It's not the level. I think, as I said, the market was afraid of more sanctions. Now we'll probably have no more sanctions and possibly even less sanctions on Russia. And I think that's an environment where the participants, they will start to look at the fundamentals of the company. I think once you start doing that, it is simply so cheap it cannot be ignored. I mean, Russia is trading at a PE of 7, which is, I think, around where it normally trades, because Russia is typically a cheap or a lowly valued market. But what has changed is really the dividend yield. So the dividend yield is between 8 to 10%, depending a bit on which index you look at. And that has steadily moved up. And there are some companies paying even 20, 30% dividend yield, depending a bit on what commodity prices you put into their models.
Could you envision that sanctions are at least partially lifted under this administration?
I think that will take time. Maybe there could be some start of rolling back some of the sanctions, but I do think we need to see a first a stabilization, then predictability, then maybe some constructive cooperation, and on the back of those achievements, you could probably then move forward. But as I see it, that lies a little bit out in terms of time.
And lastly, are there any other takeaways for investors that you would like to highlight here?
Well, I think that first of all, as they say, there's a bit of momentum. Global investors are noticing the Russian market. The market is going up. That has really been the case this year. And I think a lot of markets, they do have trends, right? So I think when the market is up 22%, it just means that more investors will just have a look at it. And I think when they have a look at it, they realize that I think more or less in all sectors, companies are very attractively valued. So that's the reason why I'm positive. And again, if there's no negative kind of noise in terms of more sanctions and geopolitics, there's just no reason why not to buy it. I think the second point is that the Russian market structure has changed. You do have quite a few tech companies now listed in Russia as well, and we moved from zero tech in the index 1.5 years ago to around 20% now. So it's quite a big difference, and of course that's the new economy, right? This is not oil and gas. These are interesting, very fast-growing companies. Some of them are actually quite expensive. Maybe you won't find a bargain there, but I think if you invest for the long term, of course, this is probably where you want to be allocated, right?
And I do think that there is quite a large structural shift in the US Russian market going on in terms of retail entering, and there's also a broad push towards better governance. We do a lot from East Capital side to engage boards and chairmen to push them on ESG, sustainability, and pollution and many other issues. And I think that the tone in those engagements have changed a lot of the last 6 to 9 months. So the Russian stock market is becoming more and more shareholder friendly with more rational dividend policies, with a pressure to create more logical corporate structures, and a kind of harder focus on core issues such as free cash flow, profitability, and dividends. So I think that's a kind of a supportive trend, and the fact that the retail sector is stepping into the stock market also means that there is a political shift where backroom deals will be less accepted, given that this is to a large extent now normal household money and pensioners saving for their future.
So good that they're talking now, and we hopefully see some stability going forward. I think the time for this webinar is coming to an end. Thank you, Anders and Jacob, for your insights. And thank you, everybody, for joining us. If you have any questions or feedback, please feel free to reach out. And have a good rest of the week, everyone.
Thank you very much.